Thank you. Ari Terjanian is a senior research analyst at Cleveland Research Company. Ari has 7+ years of experience covering the cloud and software industry. Cleveland Research Institute was founded in 2006 and provides independent fundamental research on US equities for the world's largest money managers. Clients include Fortune 100 companies like Allianz and Fidelity, etc. Cleveland Research also follow multiple industry segments. Ari's goal is to provide best market intelligence for buyers and sellers on enterprise technology. Hello, Ari. Welcome to the session. As a research associate at Cleveland Research Company, you follow the market trends closely. You also follow ERP and cloud vendors than anyone else. Can you please tell us the market and customer pulse on SAP investments?
Sure. Thank you, Ram, and thank you, Haral, Jay, and the entire SuneraTech team for inviting me to speak here today. Good morning or good afternoon to all the participants that are attending the SuneraTech Digital Acceleration Summit. Hope everybody and their families are staying safe and healthy, and really glad you can invest some time here to listen to our outlook for SAP investments and where customers are prioritizing their focus. Today, I'm going to walk through two big items. SAP's updated outlook and business strategy through 2025 under the new leadership of Christian Klein. And second, we're going to touch on the key trends and themes we're seeing in our macro and tech research that are impacting IT investments into 2021. Just a little bit about myself. I'm a senior analyst at Cleveland Research Company. I cover the tech sector and the leading software and cloud vendors. Cleveland Research is an independent research firm doing research for institutional investors, as well as Fortune 500 companies around advisory and strategic consulting. Going through this presentation today, a few key takeaways I want to leave you with. First, SAP is at a turning point. They are under new leadership of Christian Klein and paves the way for significant change over the next couple of years. First, we would expect less pressure and more focus on customer success. Second, we are expecting an accelerated shift of contracts and business models to cloud and as-a-service models. Third, SAP is returning their investment focus to their roots of the core ERP, platform, and verticalization. And last, while the macro environment is expected to remain uncertain through 2021, we have seen that IT investments have continued in pockets of verticals and solution areas. So starting on the SAP strategy update. Earlier this week, SAP management team hosted a conference call laying out several strategic initiatives and updates for the business through 2025. These are expected to have significant impact on client investments in SAP, as well as SAP's approach to customers. The key takeaways from their outlook call include that they're forecasting their cloud revenues to double as a % of the business over the next 5 years. Second, they have a more conservative growth outlook near term. Third, perpetual license and on-prem support revenues are expected to decline. Fourth, the company is going to increase its focus on customer success. And last, integration of assets, platform as a service, and vertical cloud is the key areas of focus for the company going forward. So first on cloud. 2020 SAP cloud is going to finish about 30% of revenues, about 8 billion euros. They laid out a forecast to more than double that over the next 5 years. Now, I'm sure many of you on the call are thinking, there's no way I'm going to move my SAP estate to cloud, or no way I would adopt software as a service for my ERP system. A few things to note here. When SAP is talking about cloud, they're not just talking about multi-tenant software as a service. They are also referring to their new private cloud edition that they've launched, and essentially any software or solution that they sell that's monetized as a service. We see a future where customers increasingly procure and consume SAP as a service, including things like single tenant edition. To date, SAP's cloud business has primarily been driven by net new workloads and implementations for S/4HANA Cloud, as well as various line of business applications that they've acquired. We would expect SAP to offer incentives to their customer base to migrate to a ratable subscription term. Additionally, we would expect continued partnerships with hyperscale providers, as well as hardware and OEM providers, simplifying procurement and deployment models delivered as a service. Looking at revenue growth, after growing revenues 6 to 10% the last 5 years, SAP is forecasting the business to be more flat in the next couple of years. We view this as a good sign for customers. Under Christian Klein, we believe SAP is going to be more focused on product execution and customer success, as opposed to hitting sales targets under the Bill McDermott regime. Additionally, we're seeing some macro impacts on investments, primarily larger digital transformation projects around S4, as well as the lack of business travel impacting Concur. This is offset by a lot of smaller projects being broken up into smaller pieces, more platform as a service, custom app development, cloud migrations, and we'll talk about that more. As the shift to cloud is accelerating, on-prem licenses and support are forecast to decline. This is going to result in more client investments that are OpEx as opposed to CapEx. This doesn't mean on-prem is going away completely. At the end of 2025, 30% of customer spend will still be on-prem for SAP. However, we would expect the majority of spend to be as a service. SAP's management team is now being compensated based on the Net Promoter Score. Additionally, sales leadership and field reps are being compensated on go lives and consumption, as opposed to license sales. This should help SAP and its ecosystem help customers deploy undeployed licenses, and it should also result in future projects being presented more as outcome-based and ROI-centric. Last, from a product roadmap perspective, SAP is focused on integrating their disparate assets. Again, Christian Klein has a much more technical background, working in the CTO department for more than a decade prior to taking over as CEO. SAP has already completed the tech convergence of their platform, with most of their cloud assets on the HANA database and in a public cloud environment. The next step is at the user interface level, where SAP is expected to create one semantic data model. In addition to integration, SAP is going back to their roots, where they focused on creating highly verticalized solutions that fit specific business processes for different industries. SAP is calling these industry clouds, and we expect these packages to roll out in the next couple of years. And then last on platform, similarly, where SAP has been strong in platform in the prior decades, if you think about R3 and building extensions with ABAP and Basis, they're harkening back to that with the SAP Cloud Platform and Business Tech Platform.
Thanks, Ari. What road the customers are taking nowadays, considering the cost pressure and the pandemic situation?
I'll now wrap with some recent themes that we're seeing on a high level from our research. First, IT spend has been hit this year, but it's not as bad as expected. We're seeing continued investments around platform as a service, cloud, and remote work enablement. And we're seeing a greater focus on solutions with quicker time to value that are self-funding. The election and COVID-19 are expected to provide macro uncertainty. However, we still see pockets of growth. Here's a chart just walking through the different categories and how spend has performed this year. Overall, we've still seen strength in cloud, software as a service. A lot of drivers here. First, we're seeing good investments around cloud migration, cost takeout type projects, e-commerce, delivery, track and trace, crisis communications, and automation. This is offsetting slowing in areas like application deployment and AMS. While on a macro level, things are looking a little bit challenged, we're still seeing strength in different verticals. This chart illustrates different areas of spend we're seeing. Public sector, education, financial services, tech, and healthcare, as well as pockets of retail have been strong. Trends are more mixed in other verticals, while travel and leisure still remains depressed. From a COVID perspective, COVID is increasingly seen as an endemic, not a pandemic. A vaccine is on the way, but remote work and leisure trends are expected to continue into 2021. The following shows a survey that we commissioned of 1,000 consumers, and things such as working from home, visiting restaurants, visiting stores are expected to continue to be at depressed levels, even if a vaccine is created. We've seen a lot of variance across GDP and country impact, and we're also seeing continued cases spiking depending on which country you're in, as well as which state or school you're in. The election is up in the air, and there could be different impacts on the market depending on who wins. And from a macro perspective, while macro uncertainty is going to continue into 2021, we expect remote work, learning, and leisure to be a sustained trend, and IT spend as an imperative and not something that can be avoided. With that, I thank you for your time today and wish everybody a great holiday season headed into the end of the year.
Thank you so much. That's really helpful.